The odds of a bumper rate cut from the Fed are on the rise. Welcome to Market Insight. I'm Ramzan Karmali. Stocks, treasury prices and commodities all rallied after traders raised the chances of a half-point cut from the Fed next week to 41% from close to 14% just a day ago. So is the former New York Fed President Bill Dudley right when he said there's a strong case for 50? Well, to help answer that and more, I'm joined by Mabrouk Chetouane, Head of Global Market Strategy at Natixis Investment Managers. Mabrouk, thanks so much for joining us. So, are you in the 50 or 25 basis point camp when it comes to the Fed?
I'm in the camp of the 25 basis point because at this stage, of the data that we haven't collected so far for the US, there is no reason, to cut by 50 basis point. And this is always, the same topic. What is the reason, the narrative behind a 50 basis point rate cut? It means that the US economy is not behaving very well. And when you look at the data, it's not the case. The US business cycle is declining quite, gradually, and there is no reason to rush for the Fed. So I'm still on the camp of the 25 basis point rate cut for the Fed next week, and there is no reason, in my opinion, to do more, to deliver more. So the narrative, the mantra, saying that the Fed is behind the curve is, in my opinion, wrong because the Fed has done a great job, and there is no necessity, to do more.
But what have you made of recent market movements, especially the fall of the dollar?
Well, it can be explained by different factors. The fact that these 50 basis point, priced in by the market is another leg explaining, the fall in the USD. The fact that, for example, the ECB has explained, yesterday that they are not about, to lower massively their interest rates, and it goes exactly in the same, let's in the same way as the Fed. If the ECB is not in a rush, there is no necessity to lower the interest rates by another 25 basis point in October. I don't see the narrative, the reason why, the Fed has to hurry, knowing that the US business cycle is stronger than the European one. So again, starting with only 25 basis point is, in my opinion, the best way to proceed, and it will send a signal to the market that the Fed has still the control of the situation.
Now, the Fed aren't the only central bank making a call on interest rates next week. We also hear from the Bank of England and the Bank of Japan. The first could cut and the second could hike. But am I right in thinking that both will probably keep rates on hold?
I don't think so. The BOE could, lower the interest rates by 25 basis point because I think we are in a situation where, we are attending to a kind of resynchronization of all the monetary policies. The ECB has lowered, the Fed is about to lower, and there is no reason to see the BOE, maintaining their interest rates at the current level. In a context where, we have good data coming from compensation and labor market. We have signals that is, telling us that this market is cooling down. The data are in the right way, and the BOE was waiting for, better, signals to maintain, this pattern of declining rate cut. So definitely, I think the BOE is on the right way to lower the interest rate, which is absolutely not the case of the Bank of Japan.
Now, Eurozone bond yields fell this morning, but they actually edged higher on Thursday. And you've already spoken a bit about the ECB rate cut earlier, but markets seem to have reduced their bets on how much the ECB might ease policy this year. Why do you think that is? And where do you see rates coming at the end of the year?
Well, the reason why the ECB has delivered these cautious statement yesterday is because we have still resilient increase inflation in the services, and it echoes to what Madam Schnabel said a week before when it comes to the labor market. We have good reasons to see wages continuing to feed these inflation in the services, and this is exactly the same problem in the US. The stickiest part of the inflation is still polluting this disinflationary process, and this is why the core inflation is has been slightly upward revised by the ECB for next year. So this explains why there is no necessity again for the ECB to be in a rush. Another 25 basis point rate cut in December is the most likely scenario, and I think the board of the governors they are very comfortable with the idea of cutting rates per 1 quarter for the ECB.
Mabrouk Chetouane from Natixis Investment Managers, many thanks for your thoughts. And that's Market Insight. Don't forget you can watch more videos on Reuters.com.